Hi, Harry Dent here again. Wanted to discuss a topic I've been talking about in economy and markets recently, and I think it's an important because it's a test in a time where governments have basically hijacked the free markets through endless quantitative easing and now tax reform in the United States, another free lunch that just pours money in the economy and drives up stocks and benefits the top 1% more than it does the everyday person. This is a unique time. This has never happened before. We don't have a precedent in history like we do in our other cycles and things that we study to say, oh, here's what's happening now, and here's what the next stage will look like, or here's what the burst will look like, or whatever. We just don't have a precedent. And this has gone on much longer than I would have ever thought. But we're in a space where there's a good test for how much fundamental trends like demographic trends still matter. Quantitative easing obviously has had a huge impact on the economy. We would have been in a depression without it. And people say, well, 2% growth is pathetic, but it's a lot better than a depression or a total meltdown of the financial system, which was happening until government stepped in with 12 trillion and rising of quantitative easing and all these now fiscal stimulus policies and stuff. We have had something else happen recently, which is interesting. In the Generation X downturn in births from 62 to 75, which causes a declining spending wave from 2008 into 2022, there was a bump. There was a 2-year surge in births in 1969 and 70, which would translate on a 47-year lag for the Generation X, 1 year older than the baby boomers, to 2016 and 17 as a time when demographics would have been a little more favorable for a short period of time. So this is a big issue right now because a lot of people are saying, oh, well, the stimulus is finally working. Well, I say, well, yeah, maybe it's as much or more this demographic blip. And the problem is demographic trends turned straight down in 2018 to 19. 2019 should be the worst year for demographic trends. And then it kind of bottoms and scrapes its lows between 2020 and 22 and doesn't really turn back up strongly until 2025. So we could be in a lull for a long time. But here's what I'm looking for. If demographics still matter as much as I hope they do and think they do, then the economy may start to weaken as we move into 2018 after looking stronger in 2017, especially at the top of this demographic bump. And after this tax reform, which again, just a gift from heaven to companies. I mean, even some companies are giving their employees bonuses one time, they got they really do benefit from this. This was a something for nothing gift from the government at their expense and at greater deficits in the future. And at a time when corporations don't need this, record profits compared to GDP in all of history, but they did it. So the stock market's gone crazy over this. And we did predict this would happen. The day that reversal happened in the market when Trump got elected by surprise to many, we said, oh, this reversal is strong. And we're going to see a 20% plus stock rally that's just going to go straight up. And we've seen that. So the question is, does it continue much longer or does the economy start to weaken? And that would be a sign that demographics does still matter. Doesn't mean quantitative easing doesn't. Of course it matters. That's crystal clear. What's not crystal clear is how much do fundamentals matter when the government takes over the economy like they did in central banks. Now, it's a similar thing with Japan. Japan has had a bigger bump and something we expect. In fact, I was surprised. 2003 was the bottom of Japan's demographic decline and its spending wave, way ahead of US and Europe because they had their baby boom and their bubbles earlier. But it didn't really start, the millennial generation didn't really kick in until 2014. So Abe shot his 3 arrows and tripled quantitative easing, went off the reservation from my point of view in 2013. And that's, by the way, when gold crashed, because gold was expecting massive inflation. And when he tripled the quantitative easing and inflation continued to fall, the gold market finally got, we're not going to get substantial inflation despite unprecedented money printing. And that's why gold started to crash for the first time. And there'll be more of that to come. But Japan's millennial generation has kicked in more strongly. This is a whole millennial generation, not just a blip like in Gen Xers, like in the United States. So 2014 all the way through 2020 is when this millennial demographic trend is the strongest. And I'd say that's why Japan's economy has done better since 2014. Yes, quantitative easing, especially tripling, but I think it is probably more this demographic trends. And in fact, I'm surprised the trends haven't been stronger. This is a very significant, it's the only strong demographic trend in the Western world right now. Europe's going to get weaker. We're going to get weaker 2018 forward. Japan will continue for another 3 years. And then they have another long decline. So that's not going to last forever either. But if Japan's economy stays stronger than most, if the U.S. suddenly starts to weaken for no good reason, it's going to be a sign that demographics still matter. And that'll be a welcome sign for us because it's our advantage to have fundamental cycles, that social, political, demographic, financial, that we can see the future on and to know that governments can't totally control the economy, although they have obviously had a major impact. So I'm going to be eagerly watching the trends in early to mid 2018. If we're going to see a next crash set in, the most likely time in our cycles and also with demographics here, which should be shifting slower, it should start in the first half of 2018. So I'm going to be looking for this. And as in recent video, I said, I'm going to be watching Bitcoin and cryptocurrencies because that could be one of the pins, if not the pin, that bursts this overall bubble in stocks and real estate and everything else. So we will keep you updated.